guys, welcome back to another episode with the NZDayTrading101 channel. I'm Shami, and today I'm just going to talk to you a little about something important: risk management. The ability to cut losses quick, the ability to let winners run for a little bit, um, and how to set up trades so you know where to get out and where to get out if the stock starts going down. All right, so let's get started. So the main important rule about risk management is cutting your losses quick. So that's the number one key to trading. So I'm just going to take you a little trade I did yesterday on Air New Zealand again, and where I was going to cut losses quick if the stock started going down, and where I was looking for my take profit level. Yeah, right, let's get into it. Here we go. So this is the 5-minute chart, 5-minute chart for Air New Zealand. You can look at the daily chart as well. So this is the daily chart here. As you can see, so this yellow arrow is where I got in, and this yellow arrow up here is where I got out. Cool. So I don't really use the charts to trade as such, so I don't look at the charts throughout the day. The only thing I'm looking at is market depth. This screen here. The screen is the only thing I'm looking at. And since it's Saturday today, I can't refresh the screen or anything like that, but we'll just take you through like a what if scenario. So basically, okay, let's say if this was $1.32 and this was $1.33, right? And the market opened, you saw lots the value of the trades pre-market was it over 500k or over 800k, and you know there's going to be a lot of volume, and you saw the charts and you saw there's an upward trend. Cool. So you'll be like, sweet. You want to be getting in just over a huge buy quantity. So if you saw like let's say like something like this, you want the buy quantity to stand out. So you don't want these 3-digit figures or 4-digit figures. You want these like 5-digit figures. So what happens is if you get on top of this figure, and then if you enter the trade here and it started going up, then you're good to go. But if you enter the trade here and the sellers are just too strong on this side, then you'll immediately get out to this guy, or well, that guy will be quite easy. And this is the way to manage your risk, guys. So this allows you to get out quick and just take a minimal loss, like a 1 cent loss. So depending on your account size and fees and stuff, that's what your loss will be. But another thing is you don't need to win all the time. Like if you're not comfortable in your trade, if you think it's going to go down, then just get out. Like you will see good trades come up eventually. You have to be a sniper. Like you want to be taking those shots, but you don't want to be taking every single shot. So you got to pick your shots and take them. So I took the shot yesterday on Air New Zealand, and it made me $2,000. So yeah, I was quite happy. And yeah, so if you guys learn how to trade, it's a very profitable thing to do. It's easy. People trying to buy houses these days, it's too expensive to buy and sell houses. Like you got to go for a lawyer, you got to go for the banks and all that type of stuff. And starting a business is quite hard as well. Like you got to go, same thing, lawyers, business, and all that type of stuff. But when you get into like day trading and you can make like $2 grand in a day, so whoa, you don't need any lawyers. You just simply buy some shares, wait for it to go higher, sell them off, and you just made a profit. Boom. Yeah. So it's not as easy as it sounds though. There's a long journey that needs to go. No one can just get in and start making money straight away. You've got to be able to manage your risk effectively. And the main thing is emotions. Managing your emotional control is key. If you're down on a trade, you have to cut it. Don't think, oh, it's going to go up. It's going to go up. I've experienced this myself. Like if you let your losses get out of control, if they keep going down, 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 and down, what you don't want to do is you don't want to turn into a long-term investor. You're a day trader, you're a swing trader, you stick to your plan. If you don't stick to your plan, you're a long-term investor that's going to have a stock that's down 20% for a long time. You don't want to be there. So don't fall into that trap. You have to take your losses. You have to take the hits. All right. Yeah. So again, to manage your risk, just buy on top of these big buy quantities, and if the price starts going up, sweet. If it doesn't, you have to give a little bit of wiggle room too. So if this support gets broken, then just sell to the next one. So there will be scenarios where now and again the seller's just you won't be able to sell to these guys. You just have to sell to the next one. If they can't sell to those, then sell to the next one. You might take a bigger loss than usual, but all you can do is learn from it. So that's why it's good to start off with a small account. And the more your account grows over time, the more bigger your position size will be. So if you have $1,000 account, you know, you're going to be making 2%, like what, 20 bucks, 30 bucks, 40 bucks. So if you're making, if you got $1,000 account and you're making, yeah, 5%, then you're making $50 in fees and stuff, whatever that is. I don't know, $40 you'll make profit, right? And then into your next trade, you want to chuck $1,040 in. So you want to be using your full account size to go in and out of trades. And the more your account size grows, the more size you use, the more profit you'll get. So the losses will be bigger too, but your losses will be minimal. So your wins will be bigger. It's all about risk reward ratio. So you want to ideally have like a 4-to-1 risk reward ratio. So I'll take you from my example here. So go back to, so I'm using a 5-minute chart to see. It's not all stocks will look like this. This one looks really clean. It's very rare I find really clean looking ones like this. Like you go to another stock like let's say like PLX, and it'll look all choppy just because there's not much volume going through them. Even like let's say Pushpay, that looks a bit choppy too. So New Zealand's chart is actually really clean. Yeah, just go back to it. Yeah, cool. So my risk reward ratio. So basically with my trade, I got in at about 133. So I saw that there's lots of buyer support down here. So I was like, sweet, if it starts to go the other way, then I'll just sell off to the buyers. But what happened was, as soon as I got in, it started to move upwards. So I was like, sweet, there's no need for me to sell. I was only risking around about a cent, basically, a cent or 2 cents. So I entered at 133, but I knew if things were going sour, weren't moving fast enough, then I was just going to get out at 132, so 1 cent lower, 131. So my risk was very low on this trade, but I knew the potential it had. So what happened? The price moved past my target, and there was no reason for me to sell at all. And I ended up selling up here. So I actually saw weakness up here, and that's why I sold. As you can see, it started to go higher, so I went all the way to $1.60. And that's fine. Like if it goes to $1.60, you know, good on the stock. I'm not gonna sit here and be like, oh damn it, I could have caught those gains. You just take what you get. You got to be humble. You can't be taking all the gains. You got to take your share and leave with a smile. Be happy with what you got. I'm happy with what I got. I mean, great if I could have got up here, but if I didn't, I didn't. So yeah, so I could have actually because us day traders are susceptible to higher fees, you know, $30 to buy, $30 to sell, or if you got a lower account, then you have hardly any fees. I could have actually entered this trade here again, and then I could have entered this trade here, and I could have just got out at about 146, 2 cents lower, and could have made my way higher again there. And then I would have just, as you can see, it kind of just topped off here, 160. You would have saw heaps of sellers up here, and then just went from there on 160. You just saw this huge red candle here. So this is a good signal here. This right here. It's a good signal that, all right, I think the trend is over and it's probably going to start going down. And what happened? It went down all the way back down to 132 where we started from. So I was basically in here, out here, went all up here, I don't care, oh well, and just drop back down here. And this is why you know, day trading or swing trading is a good thing, because you know, like if you can enter here and get out here and stock goes back down there, just enter it in again. All right, guys, that's a little bit about how I manage risk. It's not the fanciest video, but take as much information as you can out of that. And please like and subscribe to this channel. Helps me keep going. And the more subscribers I have, the more momentum I gain to like keep making these videos to help you guys learn how to day trade the NZ market as well. So thanks for watching, and stay tuned for the next video.